Opendoor is days away from its earnings report. We will break down the latest with Opendoor, including the options chain, the chart, and take a look at where we might be headed next. Also, we will cover the Stonkcast watch list, some other stocks that you need to be paying attention to. We will also break down the latest macro news, including the Federal Reserve's 25 basis point cut that happened on Wednesday and the outlook for December, Google smashing earnings, and also the US-China trade talks happening today. All that and much more on this week's midweek check-in. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, follow us wherever you listen to podcasts. And now, folks, as always, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, it's time yet again for the midweek check-in. I hope everyone is having a fantastic week. We've had a lot of earnings as we are in the middle of Q3 earnings season right now. And we got some news from the Federal Reserve on Wednesday. We're going to get into all that, including the US-China trade talks. But first, we got to kick it off with Opendoor. We've had a very interesting week and kind of a frustrating week, honestly. We were anticipating a breakout above 850. We've tapped it a couple times this week, and it just simply hasn't happened yet. The Federal Reserve's decision on Wednesday did not really seem to help us out a whole lot, and I'm going to get into some of the reasons why that may be, but we do have earnings coming up literally in a week, folks. Next Thursday, we get Opendoor's much anticipated Q3 earnings report with the new CEO, Kaz, new chairman of the board, Keith Rabeau, and really, I'm just excited to see what they're going to bring to the table. They've been very quiet regarding some of these updates of late. And so I think everybody at this point is just waiting to see what is going to happen. So let's jump in, first of all, to the chart. So for those on YouTube, taking a look here at the 3-month chart here for Opendoor. This is a daily chart, daily candles. And one of the things I want to point out, first of all, about Opendoor is this descending level of resistance that we've had from the 3-year high of 1087 that we set back on September 17th. As I've mentioned before, we've had a couple touch points on this trend line. October 6th, October 7th, October 8th, right? You had multiple touch points here. And then earlier this week on Monday and Tuesday, we attempted to break out again. Unfortunately, we did not, but we are clearly defining this descending level of resistance here as we tapped it again, and we've kind of come off a bit from that now after the nice run up that we had last Friday on Opendoor, where we were up 13% on the day on volume. And as of right now, we're just simply in a waiting period, folks. This is when conviction is tested, in my opinion. This is not the time, in my opinion, to be making any kind of rash decisions. There's a lot of frustration, especially on my part, that we haven't broken out above 850 yet. Yeah, it's very frustrating, but you know what? Sometimes patience pays. And right now, I think we are just all simply waiting for that earnings report to come out for Opendoor. Again, next Thursday, November 6th. We want to see what Kaz and the team are going to bring to the table. But just looking at the technicals, right? First of all, taking a look at the RSI, the relative strength index for Opendoor, we are currently sitting at 50. So right smack dab in the middle of the RSI. We're kind of in a neutral zone right now. We got as low on the RSI recently as 44. We had the run up on Friday, got back into, a 54 range on the RSI, kind of signaling a bullish, trend change, if you will. And right now we're right in the middle. We're in a very much a neutral zone here. So taking a look at Opendoor, just as far as some support levels, resistance levels, right? As far as support goes, really what I'm looking at right now is 750. I think 750 is kind of a psychological support zone. More importantly, though, I would point out the 50-day moving average, which is currently sitting at $7.27. Now, this dynamic support, being the 50-day moving average, was an area that we held up back on October 22nd last week. And so, if we come back down to that area, I'm really looking for another bounce there off the 50-day moving average. I think that's major dynamic support. And then more of a static support for Opendoor right now, I would say, is that 38% Fibonacci retracement level of $6.92, basically $7, right? We've already seen Opendoor hold this level for a couple weeks, really, this $7 price point. So this is a very significant area of support for Opendoor. It's where buyers have stepped in before, and I would venture to say it would be the same, especially leading up to earnings, right? As people kind of position to, see what's going to happen on that earnings call. So right now, those are the support levels that I'm looking at. Now, as far as resistance, it's pretty simple. It's this descending level of resistance, right? Basically just about $8.50. $8.44 is that technically the 23% Fibonacci retracement area. But really what I'm looking for is a break above 820. 820 to 830, this area here is proven over the past couple trading sessions to be resistance, right? You have this descending level of resistance. And really, if we look at the overall chart here for Opendoor, for those on YouTube, I hope you can see it because I can. We basically have a massive bull flag, a massive bull pennant, whatever you want to call it, a bull wedge. There's a lot of different terms for it, forming on the daily chart. You have this descending level of resistance here forming the top of it. And then you have this support here at $7, right? And so you have this pattern kind of playing out right now on the daily chart for Opendoor. If we can get a break above that, the upside to this move, right, on volume could be pretty massive. Just looking at a measured move for Opendoor based off of, the beginning of the pennant or the bull flag, if you will, right around $7 to the high of just under 11. That's a $4 move. So a measured move, if it does actually break out of this bull flag, I would say is in the range of $14 to $15, right? That's kind of what I'm looking at for Opendoor from a technical standpoint, looking at the patterns that are forming here. That's what I'm paying attention to. But first of all, we need to see the bottom of this bull flag hold, which is the $7, price level. And again, you got the 50-day moving average right there as well. So that's what I'm looking at. Right now, we're just kind of in this neutral, I would call it almost an accumulation zone for Opendoor. And we saw a lot of that accumulation happening, again, over the past couple of weeks. So yeah, we had a couple of red days. We did not break above that descending level of resistance, which is frustrating. Everybody wanted that move, of course. But we are still sitting in overall, on the grand scheme of things, a bullish chart pattern. So I am expecting a move to the upside. Really, it's just a matter of when. We just simply have not had enough momentum to the upside. We haven't had that catalyst yet. And so we're kind of just in a waiting period. But I still like the setup for sure. I'm very bullish on it personally. And look, at the end of the day, what it boils down to, especially with earnings on the horizon, is whether or not you trust Kaz and Keith Rabois, whether or not you trust the leadership of Opendoor. I, for one, I do, which is why I've placed my money in Opendoor, right? I'm betting on the upside here because I believe that they can turn this story around. As, we've already seen the momentum in Opendoor pick up with the new leadership change. And I'm very curious and excited next Thursday to see what are some of those updates. What are some of those changes that Kaz is bringing to the team? We've already talked about the fact that they're kind of trimming some of the costs. They're using AI to run the operation more efficiently, right? We've heard rumors about partnerships with, Robinhood and other companies, tokenization of real estate. There's a lot of things on the table as far as speculation. Now we get to see what has Kaz actually done in his short tenure as CEO. Not to mention the fact that guidance was dropped after Q2 earnings, right? And so the bar is set low, so to speak. So there is the chance that Opendoor could be earnings on top of any additional news that we get as far as the direction of the company, the vision that Kaz has. So Very excited for that. Again, earnings a week out next Thursday. That's what I'm paying attention to. And really for the remainder of this week, best case scenario, we finally get this break above this area, either today being Thursday or on Friday to end the week. However, if it does not happen, all is not lost, right? We are still in this area here. We are holding 7, and we're kind of, again, in this kind of neutral zone as shown by the RSI. Now let's take a look at the options chain for Opendoor to see what the action looked like on Wednesday. So despite the red day, we had an aggressive put to call ratio heavily favoring the bulls. Put to call ratio 0.14. That is one of the highest put to call ratios that I have seen in a long time, folks. We had calls in the range of 349,000. We had puts of only 50,000. So a lot of action happening on the call side for Opendoor. The current IV percentile for Opendoor is currently 31%. Now, if we take a look at, the November 7th expiration, 9 days out, right? This is going to be the day after the earnings call for Opendoor, just to get an idea of where are traders, where are investors putting their money, speculating based off of, what direction this stock could go post earnings, right? And if we take a look at the call side for Opendoor, you have 15,000 of open interest currently sitting at $9. And you do have some open interest all the way out to $18, the $18 strike price. You got open interest there of 6,600 to the downside. Majority of the open interest is currently sitting at 7, which makes sense because that has been, a support level. And so if it breaks below that, you could see a pretty big move to the downside there for Opendoor, especially post earnings. So right now, that's what the November 7th expiration looks like. Looking at the next monthly expiration, which is November 21st, you got 75,000 contracts of open interest sitting at the $10 strike. And to the downside, majority of the open interest is sitting at the $5 strike. You got 19,000. So again, a heavy bias towards the call side on the options chain for Opendoor. And then looking at January 16th, this is a strike that I've been paying attention to. I've notated on the show before, the $21 strike. You got 56,000 contracts of open interest sitting there. Somebody is betting very, very heavily that we're going to get a pretty big move to the upside on Opendoor. I just thought that was very interesting. You got 65,000 sitting at the $10 strike. So those are just some of the notable, open interest strikes right now for Opendoor. But look, at this point, let's see how the week closes out. It's been frustrating for the bulls. But we have not had a massive breakdown of the chart. And I think that's a positive thing. Again, patience pays. If you're involved in Opendoor, you just need to understand right now you're in a volatile play. It's kind of dormant right now. It's kind of quiet. And everyone is simply just waiting for earnings. We're waiting for that next catalyst, that news catalyst to drop. So that's what I'm paying attention to on Opendoor. Make sure to, leave a comment on YouTube. Let me know if you're involved in Opendoor. Let me know what your thoughts are on earnings coming up, what you think might get announced, what may not get announced, and whether or not they're going to beat. That's going to be very, very interesting to see if, any of the lowering of, mortgage rates over the past month or so have, brought more liquidity to the table for Opendoor, because essentially that's what Opendoor needs. They need liquidity when it comes to the buying side, the selling side, when it comes to residential real estate, so that they can do what they do. So that's what I got for you on Opendoor. We'll, of course, continue to pay attention to this and see how the rest of the week looks. And we'll bring you an update on this, of course, on the market update episode coming out on Sunday. Now let's move on to some of the Stonkcast watch list. So some other tickers that I'm paying attention to. First of all, I want to take a look at LMND. So this has been on the radar for a while now. This is a disruptor when it comes to, AI involved in insurance, right? Another legacy industry kind of archaic industry, insurance that is, right? So you have Opendoor using AI in real estate. You got Lemonade using AI in insurance. And so Lemonade right now, folks, is looking fantastic. It hit a new 52-week high on Wednesday of $62.67. It was up 5% on the day, and it just looks fantastic. I think there's a lot more upside for Lemonade. And so if this is not already on your radar, make sure to have it on your radar. Because again, in my opinion, there's a lot more upside for this one in particular. As far as the put to call ratio for Lemonade, currently sitting at 0.25. A lot of calls being bought versus puts on Lemonade. And taking a look at, let's look at the January 16th. As far as some of the open interest, majority of it is right around the $75 strike. So you got some significant bets to the upside for Lemonade. Let's do a quick check-in on Bitfarms, another play we've been paying attention to here on Stonkcast. This is a Bitcoin miner getting involved in the AI data center side of things. They do have the infrastructure for a lot of the hyperscalers looking to get deals done. So if they do get a deal done, you could see a massive move on this, similar to what we saw with Nebius. So as far as Bitfarms closing out on Wednesday, it closed at $4.26, down slightly on the day, basically break even, hovering around that 38% Fibonacci retracement level from the high of 660 that it had back on October 15th. And really what I'm looking for on Bitfarms, because I do believe it has legs to the upside. But what I want to see first of all is if it holds this 38% fib level, or if we're going to come back down to this 364 level. If I see a green day on Thursday and heading into Friday as well, if we're able to hold this 38% fib level, get back above the 20-day moving average, I think that's a good indication, in my opinion, to maybe be looking at some shares or calls, right, for the next leg up on that one. And then last but not least, just want to take a look at Sana. So this is a biotech play that Eric Jackson, the champion for the Opendoor movement, hedge fund manager, he's got some other plays he's involved in. Sana is one of them, right? This is a biotech play. I believe Eric Jackson said on X that he has leaps on this, meaning calls that are dated longer than a year. They expire in January of 2028, and he has a $12.50 call strike. So he believes that Sana over the next year plus is going to double. So this is another interesting play to have on your radar. Closed at $5.37 on Wednesday, down just about almost 4%, but still looks very bullish to me. I would love to see some support for him here, get back above the 5-day moving average of $5.48, and then break a high of $5.70, which was resistance back on Monday for that next leg up. But these are just some of the plays that I'm paying attention to. For those on YouTube, make sure to drop a comment. Let me know anything else you want me to cover, anything you want me to potentially add to the Stonkcast watch list. But these are just some other plays beyond Opendoor that we're paying attention to make some money. So that's what I got for you there. And now let's move on to the major indices. So first of all, let's do a quick check-in on the S&P 500 via SPX, the index. Taking a look at Wednesday, we closed at 68.90, and we are right at the 100% Fibonacci extension level, folks, from the April tariff lows that we had. So wasn't that long ago that we were sitting at the 78% extension level, and now we've made our way all the way up to the 100% extension, which is just incredible. I believe that the S&P is going to clear 7,000 before the end of the year. I've heard some people call out 72,000 at this point, which does not seem that crazy at all. But taking a look at the S&P, it was basically flat on the day. It was up 0.3%. And then we got the Fed rate decision. You had some fears regarding whether or not a December rate cut is still on the table. And so we ended the day basically flat on the S&P, but that's where we stand right now, still above all the major moving averages. If we get a trade deal done with China, which it sounds like may be on the table, we'll get into that with the macro news. But if that happens, I believe that would be another macro catalyst to carry us to the upside. Quick check-in on the tech-heavy NASDAQ via the Qs. And the Qs look great. They were up almost 0.5% on Wednesday, another all-time high, closed at 635.77 on the Qs. So tech continues to have a massive rally to the upside. Nvidia hit $5 trillion in market cap this week, which is just insane, and that definitely helped the Qs overall. We saw some pretty good earnings out of some other tech companies such as Google, which we'll get into, and that definitely lifted the Qs as well. Quick check-in on IWM, the small caps, right? And Wednesday was not that great of a day for small caps. Closed down almost 0.9%. This is, when we talk about small caps, they're very sensitive to the Federal Reserve's, Fed fund rate, right? Small caps in general are just very sensitive to rate decisions when it comes to refinancing their debt and just daily operations, right? It's very important for them. And so because of the uncertainty around December's rate cut, basically we saw IWM kind of sell off a little bit. It's still above the 20-day moving average, and we're not that far off all-time highs of 252. Quick check-in on the VIX, right? The fear gauge on the market. When the VIX is above 20, there's an uncertainty. When it's below 20, there is stability, generally speaking. The VIX on Wednesday closed at 16.92 on the VIX. So we still are below 20, which is good, but we did see a slight uptick. And really, we've seen a slight uptick in the VIX over the past 3 days after being as low as 15. So, even though we're seeing the overall market continue to climb, there is still a little bit of uncertainty, especially around China and the US with the trade talks. And so we've seen a bit of an uptick in the VIX because of that. Quick check-in on Bitcoin at time of recording, down just over 1%, currently sitting at 111,475. Really on Bitcoin, what I'm looking for is support at 107. It's been support multiple touch points over the past few months. So would love to, see that hold. And then really what I'm looking for on Bitcoin is a break above 116 to, continue to the upside and try to take a crack at another all-time high. But Bitcoin is going to be also very sensitive to the rate decision, crypto in general, right? And so again, because of some of the uncertainty that Jerome Powell mentioned on Wednesday around December's rate decision, we saw some softness in the crypto market and obviously the biggest crypto of all, Bitcoin. So that's what I got for you on some of the major indices. And now let's do a quick check-in on the macro news. So first of all, I want to highlight this piece here from the Wall Street Journal. So Fed cuts rates by another quarter point, but future cuts are far from certain. The Federal Reserve lowered interest rates at its second consecutive meeting, but Chair Jerome Powell cast doubt on expectations of a further rate cut this year. Powell made an unusually pointed intervention at a news conference following the meeting Wednesday to push back against market expectations that a rate cut at the Fed's next gathering in December was a foregone conclusion. Far from it, he told reporters. The last quarter point cut will reduce the Fed's benchmark short-term interest rate to a range between 3.75% and 4%, the lowest setting in 3 years, and down from a peak of about 5.4% that the central bank maintained for much of last year. The cut was made to extend an effort to prevent a recent slowdown in hiring from turning into something more serious. Powell's comments underscored how the easiest part of unwinding the central bank's aggressive rate increases might be over as he navigates a committee with what he identified as a growing chorus of officials who were wondering whether further cuts are warranted. That thorny task has been complicated by a data blackout resulting from the government shutdown. If officials continue to face a very high level of uncertainty about the economic outlook because of the shutdown, it keeps the Fed in a data blackout ahead of its next meeting. That could be an argument in favor of caution about cutting again. The Fed approved the rate cut on a 10-2 vote. Kansas City Fed President Jeffrey Schmidt voted against the decision because he favored no change in rates, while Fed Governor Stephen Moran dissented in favor of a larger half-point cut. Separately, officials agreed to stop their 3.5-year campaign to shrink the Fed's $6.6 trillion asset portfolio on December 1st. That effort had been designed to unwind pandemic stimulus passively. So we got the rate decision, which is great. 25 basis point cut on Wednesday. That was, basically baked in. But really what traders, investors, the overall market, what the market was looking for was a bit more of a dovish tone out of Fed Chair Jerome Powell as it relates to that December cut. And unfortunately, we didn't exactly get it. Instead of, essentially confirming a December cut, he said it's not necessarily a guarantee. And we did see that impact based off CMEgroup.com. The probability of a December rate cut dropped from, basically 90% down to 67.8%. So it's still better than half. But we have now basically gone into a position where, we're basically looking at 30% chance, 32% chance, that is, that we stay right where we are at come December. And so, obviously the market didn't really like that. And that's why we saw some downside towards the end of the day after Jerome Powell's comments on Wednesday. So that's where we stand right now. And, look, as it relates to, Opendoor, for example, the interesting thing that I found from Fed Chair Jerome Powell's comments is the fact that, as the article, the Wall Street Journal article lays out, the Fed is, basically gonna, stop quantitative tightening on December 1st. So they are basically in a position now where, they're trying to shrink their, their balance sheet, right? And so basically Jerome Powell said that they're going to let mortgage-backed securities mature, and then they're basically going to put them into short-term treasury bills, right? That doesn't necessarily help the longer end of the curve, like the 10-year, the 30-year, things that are going to be more impactful for 30-year mortgages. In particular, the 10-year is usually what mortgages are most correlated to. And so it doesn't really help on that front. But again, I don't think it boils down with Opendoor whether or not you trust leadership, in my opinion. Yeah, that kind of sucks when it comes to, the long end of the curve. That doesn't really help mortgages, which would help Opendoor. But at the end of the day, whether or not you trust Kaz and his leadership to, get things done, you don't want to necessarily be making trades or investments, I would argue, just solely based off what the Fed does, right? So it's not the end all be all, but, let's, basically pay attention to the 10-year, which I believe last I checked was sitting right around 4%. Would love to see that drop a bit more. That will help mortgage rates come down, right? But let's see what happens there. But as of right now, it does appear that December's rate cut is still, I would lean more towards it's going to happen than not. But the odds have come down a little bit based off of what Jerome Powell said on Wednesday. All right, let's move on to another piece here from the Wall Street Journal. Google revenue soars to record as AI boom lifts cloud business. So Google's parent company reported a 16% surge in third quarter revenue, with growth in its digital advertising cloud computing units helping to finance robust artificial intelligence spending. Sales reached a record $102.3 billion for Google parent Alphabet, ahead of analysts' expectations, and net income was about $35 billion, a 33% increase over the same period a year ago. Shares rose nearly 6% in after-hours trading. So, big win for Google as it relates to earnings. And if we just do a quick check-in on Google's chart, we saw a massive move, another all-time high for Google. And, if we drill down into a 2-day 30-minute chart, you can see the after-hours move. I mean, we went from 275, folks, all the way up to 296. So a nice bump up for Google, parent company Alphabet, based off of another earnings smash. Great revenues, great to see. It's always great to see a Magnificent Seven company smash on earnings, because the Magnificent Seven makes up about 30% of the S&P. So you want to see that. There were some other big companies, Magnificent Seven companies in particular, that reported earnings, one of which was Meta. Meta did not have the same result, folks. Basically, They had some issues with some kind of tax bill that they had. And so basically, their earnings disappointed based off that. We did see margins kind of dip a little bit for Meta. And so we saw Meta in after hours go from 751 down to a low of 680. So we're seeing some of those margins on some of the CapEx spending starting to dip a little bit. So not great for Meta in the long run, not too worried about Meta, but they basically said that, hey, we had this tax and that's why our margins were not as great. I guess we'll find out on their Q4 earnings whether or not that's true, if we're able to see, a return to some of those margins. But if you're long on Meta on the long term, right? This is a dip buy moment, in my opinion, not financial advice, of course, but that's basically how I would be looking at that. And then another one, you had Microsoft, and, basically looking at Microsoft, their earnings were good, but the stock did drop a little bit in after hours. We went from 540 down to lows of 515, nothing too crazy there. Sales of 79 to 80 billion versus 79 estimate, so a slight beat there. But you got to remember with Microsoft, again, another one of the Magnificent Seven companies. You got to think long term, right? Especially with some of the spending that Microsoft has been doing, right? I think it's on the right path, and if you're a long term investor, this is the kind of company you want to be in, especially as it relates to some of the AI spending and things of that nature. That's the movement right now, right? We're basically in this like new wave, as Keith Fitzgerald loves to say. We're in this new wave of innovation, and it's around AI, and some of the bigger companies that are involved in AI spending would be Microsoft, would be Meta, right? NVIDIA, things like that. So, this is another company that I feel pretty confident in holding if, I'm a holder in it. But, as of right now, that's what we got. We got a couple more of the Magnificent Seven reporting on Thursday. Today, we get Amazon, we get Apple after the close. So let's see how those do. But so far, minus Meta, overall, I would say the Magnificent Seven earnings have looked, decent. Obviously, you had Tesla the other week, and that wasn't too great. So it's kind of honestly been a mixed bag. But I would say more good than bad overall. All right, moving on to this last piece here. Trump expects to sign China trade deal at Z Summit. So President Trump said he expects to sign a trade deal with China when he meets Chinese President Xi Jinping on Thursday, potentially paving the way for a de-escalation in tensions between the two sides. He said, quote, President Xi of China is coming tomorrow here, and we are going to be, I hope, making a deal. I think we are going to have a deal. I think it'll be a good deal for both, Trump said in a speech at the APEC summit on Wednesday in South Korea. He said, I think it's going to be a great deal. Trump and Xi's highly anticipated meeting is expected to cover a wide range of topics, including the export of chemicals used to produce fentanyl. The president has said the U.S. expects to lower tariffs on China in exchange for cooperation in cracking down on the export of chemicals used to make the synthetic opioid. In the speech, he said that his administration will end, quote, unfair trade barriers and overhaul weak, pathetic supply chains, touting agreements signed during his Asia trip. On this trip alone, he says, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan, our deal with the Republic of Korea, adding that Seoul and Washington will be working together in shipbuilding. Around the world, we are signing one trade deal after another to balance our relationships on the basis of reciprocity. So, right now, the big trade deal that the entire market wants to see, that everyone's been waiting for since April, is China. This is a major catalyst, and I think this could propel the S&P way higher if we actually get this deal inked. These two sides have been going back and forth for half a year now. And so if Trump and Xi Jinping are able to come to terms and actually ink something, that's what the market wants. The market doesn't like uncertainty, and we've had a lot of uncertainty around China. And I've said before, this has been inevitable, in my opinion, because for them, China and the U.S., to not get a deal done is mutually assured destruction. Both sides need each other, right? These are two of the largest economies in the world, and so I fully anticipate them getting a deal done. But once that deal is officially inked, barring any kind of negative news at the last minute or any negative surprises, this could be a big move for the overall market. So something to pay attention to here on Thursday. All right, let's move on to the economic calendar. Taking a look at what we got here. So new home sales come out this morning, 7 a.m. Eastern for September. You had a previous number of 800,000, forecast 710,000. This is an important number as it relates to Opendoor. Are we seeing movement, right, when it comes to home sales? We already saw a good number last week with existing home sales. We're seeing liquidity coming back into residential real estate. We want to see the same thing with new home sales. That comes out today. Also, GDP at 8:30 a.m. Eastern, previous at 3.8%, forecast at 3% for Q3. And then Friday on Halloween, October 31st, we're going to get core PCE. This is the Fed's preferred inflation gauge, personal consumption expenditure coming out there. So that's what we got for earnings this week, for the economic calendar this week. And now let's move on to earnings via earningshub.com. So we already talked about some of the Magnificent Seven that reported on Wednesday: Microsoft, Meta, and Alphabet. You also have some other notable earnings that happened on Wednesday as well. We had Starbucks, we had Chipotle, Carvana, Coca-Cola, a lot of big earnings right now, folks. Now, as far as the remainder of this week, you're going to get, as I said, Amazon and Apple reporting after the close today on Thursday. You're also going to get Reddit and Coinbase as well. And then on Friday, Halloween, October 31st, before the bell, you're going to get Chevron, ExxonMobil, Colgate, some of the larger, maybe more defense or energy specific companies reporting. So that's what we got for earnings this week. And then as far as next week, you got some more big hitters, folks. You're going to get Shopify, Spotify on November 4th. You're going to get Hertz. Definitely make sure to go check out Earnings Hub or wherever you look at earnings, because we are in the middle of Q3 earnings season and there's a lot on the table. Robinhood reports next week on Wednesday. And then, of course, you're going to get Opendoor reporting on Thursday after the close, November 6th. So that's what I got for you on this midweek check-in. A lot to digest. Let's see what happens with President Trump's meeting with China. Let's see if we can get a trade deal done. Let's see how Opendoor can hold up the rest of this week. Would love to get a break of that 850 annoying resistance level. Let's see if we get it. Make sure to drop a comment. For those listening via podcast platforms, make sure to leave a rating. It definitely helps out with the algorithm there. Make sure to follow the show. Make sure to like and subscribe and share with a buddy. Appreciate all the support. And folks, as always, remember, plan the trade and trade the plan. Have a good one.